Hello everyone, welcome to the first part in looking at the key results in the cost of supply study. So we are going to do this section by looking at the 4 steps in the cost of supply study as outlined in the NESA's cost of supply framework. The first step is the revenue requirement. The second step is the cost functionalization. The third step is the cost classification, and the fourth step is the cost allocation. In this particular sheet, we are looking at the first step, which is the revenue requirement, as you can see by the sheet name here. By definition, this basically means the revenue that you require to cover the cost of supplying your customers with electricity. So in this particular sheet, you'll see that this has been separated into 2 different categories. The first one is the allowable cost. So this basically is the total cost that you incurred and you're allowed to recover using your tariffs. So this section is further subdivided into the energy purchases from Eskom, your operational expenses, minus your other revenues and adding your surplus. The second section is your not allowable costs. So this is the cost that you incurred, but unfortunately you cannot recover this using your tariffs. So this basically is your losses. When you determine the revenue requirement, there's different methodologies that you can follow. So for the purpose of this exercise, we followed the cost plus methodology as outlined in the NESA's cost of supply framework. So this basically means you are adding your total cost plus a surplus. And this surplus must be in the ranges of 10 to 20% of your total costs. So the way in which we try to see if we are in compliance with what the framework says is by looking at the percentages in column L. For example, in my example, I can see that I'm spending about 64% of my money in buying electricity from Eskom, about 37% of my costs in operational expenses, but only 1% is surplus. So this means that in my methodology inputs sheet, I did not allocate my surplus properly. So to correct this, I'll come here at the bottom between these 2 arrows. I'll right click in one of them and then I'll see the list of the sheets that I have. So I go up until I find methodology inputs. So in the methodology inputs sheet around column K, between rows 27 and 28, I can correct my surplus factor. At the moment, it's sitting at 1%, so I can choose 10%. Once I'm done with this, I can go back to my revenue requirement and see that this has been catered for. So that's all that we're looking at in the revenue requirement. The second step then is the cost functionalization. By definition, this basically means we're taking the total costs that we calculated in the revenue requirement and we are splitting them into 3 major functions. The first one is the generation, the second one is the transmission, and the third one is the distribution. However, because majority of the municipalities are distribution utilities, meaning that all of their costs are distribution costs. So what the tool then does is it further splits your cost into your main functions within your utility business. So this would be your energy purchases, your capex and return, your depreciation, your network repairs and maintenance, as well as your OPEX. So as you go down to the bottom, the total amount that you get in this particular sheet must be the same as the total amount that you got in your revenue requirement sheet. And this will say true to show that it is aligning. If it's false, that means there's something that we did wrong in the previous sheets. So an obvious indication here is that there's amounts that are being duplicated and they are not allocated any function. So to correct this, I must go to the financial input sheet and try to see if the functions have been allocated properly to the expenses. So I'll go back to my arrows, right click, go a bit up, and then look for financial inputs year 0. So when you get to this sheet, you'll see column M and column N is where you are allocating a function name to each of the expenses that you're incurring. And when you click in one of the drop-down bars, you'll see that the model recognizes only 4 functions that you can use when you are allocating a function. So this will be capex and return, depreciation, network repairs and maintenance, as well as OPEX. So for every expense that you're incurring, must be allocated either one of the functions. So I'll try to see if all my expenses have been allocated properly. So in my example, I can see that this particular expense is allocated as 0 and this is not recognized in calculations. So I'll assign it one of the functions. Then I'll go back to cost functionalization. Okay, this has been rectified and the total amount corresponds to the total amount in the revenue requirement. And this can be seen by having a true here. The third step is the cost classification. By definition, this basically means that the total costs that we calculated in the revenue requirement sheet will be split into 3 main classes or cost drivers. The first one will be energy, the second one will be demand, and the third one will be customer driven. You will see in this sheet that there is a lot of tables, and for the purpose of this exercise, I'm not going to go through all of the tables. The purpose is to show you how these final values were calculated. So if you're interested in the details, you're more than welcome to follow the formulas and the tables. However, for this particular video, I would like to focus on column AN, column A0, column AP, as these are showing how our expenses are split into the energy, demand, as well as customer costs, and that totals can be found at the bottom here. So you will know that in total, this is how much you spend to purchase electricity. In total, this is how much you spend on your network. In total, this is how much you spend to service your customers. So when you add all of this together, they should give you this value. That is the same total as what you found in revenue requirement, the same total as what you found in cost functionalization. And to show that this alignment, you'll see that there is a true here. If it's not true, you will follow the same remedy that we recommended in the previous sheet by going back to your financial input sheet and see that you've allocated the functions properly as well as the expenses. And the final step is the cost allocation. So this is where you are splitting the bill to your customers. So this is the step that you're trying to see how much am I spending to service my residential customers, how much am I spending to service my commercial customers, and so on and so on. This enables you to know how much you would need to charge them in order to recover the total cost of service. Similar to what we've seen in cost classification, there is a lot of tables that are showing you exactly how the total values were calculated. So if you're interested in the details, you are more than welcome to follow. However, we are interested in the very last table. So as you can see here, the costs are now allocated to each of the customers. We've managed to split the bill. So domestic prepaid for both the wires business as well as the retail business, I can see exactly how much I'm spending to get to the total. And just like what we saw in cost classification, the total value that you see here should be the same total value as what is in the cost classification, should be the same total value as what is in the cost functionalization, and should be the same value as what is in the revenue requirement. And this will show a true that this is aligning. So if you are seeing true in all of these sheets, it means the model is calculating correctly, and you are more than welcome to follow the formulas. So that's it for the first part. Stay tuned for part 2.